Hi, welcome to another edition of Tobin Talks. Today we're going to talk about the all-important mortgage contingency clause in the FAR bar contract. Fortunately, the attorneys and the brokers in South Florida have worked together for a number of years, and we've come up with a very solid form contract that we call the FAR bar, the Florida Association of Realtors and the Florida Bar. The most important clause of that contract is generally paragraph 8, the mortgage contingency clause. So if you're buying property, paying cash, you can probably turn this video off. Now, if you're a seller, keep listening. But this is not for cash buyers. This is for the majority, however, of buyers of property who buy a home and need a mortgage. If you need a mortgage to buy that home, you better have paragraph 8 financing checked properly. And that's what we're going to talk about today, paragraph 8. First thing you need to do is figure out exactly how much money you need to borrow to make this purchase happen. And that amount needs to be the contingency amount of your contract, meaning that if you don't get a mortgage for that amount, you don't go forward with the contract, you're released from your obligations, and you can get your escrow deposit back. So once you know the amount you need to borrow and you put that in your contract, you then put in the number of days you need to get that mortgage. The standard is 30. If you don't put anything in, it will default to 30 days. Let's go with that assumption. It's your obligation as the buyer to make an application for that mortgage within 5 days generally, and to use diligent and good faith effort to get that mortgage. That's a legal standard, and it basically means do everything that the lender requires of you. Give them the application, your pay stubs, your bank returns, your tax returns, your bank statements, and everything like that. Now, come that 30-day period, if you haven't gotten your mortgage, it's your responsibility to advise your attorney, your broker, the seller, whoever, in writing that you haven't gotten your mortgage, you haven't been approved for the loan, or the property hasn't appraised. It's your obligation to cancel by that deadline and get your deposit back. If you've gotten your loan commitment in writing, it's your obligation to notify the seller you've gotten your loan and you're proceeding. If you're somewhere in the middle and you don't know definitively that you have your loan commitment, then it's incumbent upon you to ask for more time and negotiate an extension. The point being, it's the buyer's responsibility to notify the seller if they've been able to get their mortgage or not. The reason that is because the consequences of not timely canceling or not letting your seller know that you may need more time is that your escrow deposit will be considered hard, your obligations are firm, and your contingencies are waived. Unfortunately, in the real property world, we have disputes involving this provision all the time. So if you're a seller of property to a buyer getting a mortgage, or you're a buyer buying property and you're getting a mortgage, make sure you know paragraph 8 financing in and out. If you don't, feel free to ask us, and we wish you the best, and we thank you for tuning in. Bye-bye.